We got some huge news for Tesla stock investors as reports came out about Tesla's sales declines in Europe. Additionally, Tesla CEO Elon Musk has pledged to spend more time at the automaker to stem some of the worries from investors about the company's declining prospects. I'll talk about these factors and what it could mean for Tesla stock investors in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, according to a report, Reuters stated that Tesla's sales in Europe fell 49% in April from a year earlier. This is even though battery electric car sales increased by 27.8% as the US EV maker's upgrade of its Model Y shows little signs of reviving the brand's fortunes in the region. So there is a bit of good news to take away from this, and that is that EV car sales jumped by 28% in Europe. That's good news for Tesla stock investors because those EVs need to charge somewhere, and many of them have the adaptability feature to use Tesla charging stations, and Tesla has the best charging network around the world. So an increase in EV sales is good for the long-term prospects of Tesla. In the near term, however, Tesla's brand damage and its competitive disadvantages has led to declining sales in its automotive segment. In April, the decline in sales was 49% year over year. That's half. Its sales halved year over year. That's a huge decline for a company the size of Tesla. And it's not just the brand damage. I know a lot of articles and a lot of investors point to the brand damage as a result of Elon Musk's political activities, but it's also due to the competitive disadvantages of Tesla's cars. It hasn't really remodeled its or refreshed or delivered new models in several years. And so it's selling basically the same cars for 5 years running and more, besides the Cybertruck, while competitors have continuously upgraded and updated newer models, more exciting models at lower prices too. Some of the Chinese automakers are doing a great job producing these cars at lower prices. And so it's competitively at a disadvantage now after years of sticking with the same model. And on the flip side, that benefited Tesla because if you're producing the same model, then your costs are lowered. You're not investing so much in research and development to make a newer, updated model. You're learning how to produce that existing model more efficiently, and so your profitability is increasing. So for years, Tesla benefited from that strategy of sticking with the same model, but now it's starting to realize some of the downsides of not producing newer, updated models. And so I think it's a combination of factors that's leading to Tesla's sales declines. So looking at it a little bit longer, year to date, April sales were down 49% year over year in Europe, and that's accelerating the declines. So year to date, from January to April, Tesla sales are down 38% year over year. So that means in April, the sales decline accelerated. It's worsening. The sales declines are worsening for Tesla. And that's not what you'd like to see. If you're seeing a company with its sales falling, you like to see the declines getting smaller and slowly moving towards a break-even level and then hopefully rebounding to growth. But that's not what we're seeing with Tesla. Its sales are worsening year over year. And somewhat unsurprisingly, Tesla's stock price is up by 5.38% on the day after this news came out. And Tesla's been one of those stocks that hasn't really traded on fundamentals. The price of the stock is usually dislocated from the fundamentals of the company's actual performance. Investors in Tesla stock respond to announcements about something distant in the future and less so, and they're more willing to ignore these kinds of facts about declining automotive sales and the negative consequences that can have for even some of those future prospects that Tesla stock investors are so optimistic about. So when Tesla last reported quarterly financial results, This was for the quarter that ended March 31st, 2025. They already reported sales declines in the automotive segment of 20%, down to 13.9 billion. And the figures so far coming out from second quarter results looks like it might be a bigger decline year over year in the second quarter than there was in the first quarter. And that decline in the first quarter led its operating profit margin to fall all the way down to 2.1%. It only generated operating income of 399 million. And if its automotive sales are declining at a above 30% rate in the second quarter, which I don't know for sure just yet. We've only had April sales figures, and this is not from Tesla. This is from an outside report, and this is just in Europe. Tesla has operations around the world in the US and in China. And so we don't know just yet. But if indications continue like this and automotive revenues decline more than that, there's a chance that Tesla's operating income, its operating margin, could fall dangerously close to zero or even negative in the second quarter. Already, net income fell by 71% in the previous quarter to 409 million, down from 1.39 billion in the same quarter the prior year. And this is important not just because I know a lot of Tesla investors will say, well, the automotive segment is not important. That's not why we're investing in Tesla stock. We're investing in Tesla stock because of driverless car technology and robots. Well, this is important because the automotive segment, car sales, are the driving force behind the investments in those other technologies. If Tesla's not generating profits from car sales, then where is it going to get the money to invest in the driverless car technology and the robotics? Now, the balance sheet is excellent. Tesla does have $37 billion in cash and equivalents on the balance sheet. So it can use this capital for a long time to make those investments in R&D for driverless car technology and robotics. But how long will that last? It won't last very long if they continue losing money on the bottom line, if they turn to losing money on the bottom line, which they're not there yet. But if these automotive sales declines continue, it's at risk of losing money on the bottom line and therefore maybe slowing its investments in some of those more innovative categories and slowing the development of those technologies. Now, Tesla stock investors don't seem to mind the declines in automotive revenue. I'm looking at finchat.io here for the forward price to earnings ratio. There's a link in the description. If you use my link, you'll get a discount to this data service that I utilize frequently. Tesla's forward price to earnings ratio is now at 169. And with profits declining and in the stock price increasing, it's likely that this forward price to earnings ratio will remain elevated and overvalued for some time. Now, some of the good news is that Tesla CEO Elon Musk did pledge to spend more time at the company, and Tesla CEO has done a great job of inflating the company's stock price, of marketing to investors, of keeping them engaged and keeping them focused on the longer term prospects and not paying attention to declining car sales. And also, the company did announce that it's on track to test its driverless cars on the roads of Texas by the end of June. And really, that's what's going to keep investors engaged. Even if the test is, not that meaningful in terms of tangible evidence of success, I don't think that's the point. I think the point is that it creates headlines and it creates more enthusiasm from Tesla stock investors to stay engaged and stay focused on that longer term story of we're going to develop driverless cars. It's going to be $1 trillion revenue generating business with hundreds of billions of dollars of profits. And then we're going to do robots, and that's going to be another several $1 trillion. According to Elon Musk, it could be a $10 trillion opportunity. And so these types of developments, even if they're slow, even if they're behind schedule, even if they're less than promised, it keeps investors engaged and keeps the stock price moving higher, which is really what Tesla stock investors care about, right? It's your increase in your wealth as a result of owning Tesla shares. It doesn't matter where that shareholder wealth increase is coming from. If it's coming from a CEO who's a genius at marketing and keeping the stock price moving higher, well, it doesn't really matter if it's from that source or if it's from rising sales and profits and cash flow. As long as your wealth is increasing, I think Tesla stock investors would be happy with even marginal progress on these developments.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.